what's the biggest deal here in earnings? I mean, overall, they looked pretty good, but there were a couple of little hiccups.
I think demand trends have been relatively consistent. Google's ad revenue growth was untouched. It's been the same for about 9 years. Facebook's growth was like dipped by a point, so that's very consistent. Amazon showed a little bit of acceleration. And actually, although there was a lot of noise around the Netflix earnings of the big names, Netflix's results actually showed modest acceleration and growth. They had a reasonably successful price increase. So I'd say demand fundamentals are unchanged. There's a little bit more regulatory noise across all of those names, and maybe a little bit more competitive risk, with the big one being Netflix. Other than that, demand's the same.
Pinterest, Shopify, there's some concerns around those kinds of names, challengers.
So then you get into the high multiple stocks. So, that's your kind of vanguard internet, kind of reasonable valuation with the exception of Netflix. Then Pinterest and Shopify give you your 10 times multiple stocks. Those are expectation stocks. So if you don't print to the high end of expectations, you're going to see a correction. That's what happened in both of those names.
Youssef, what do we got to see from Peloton, Uber this week?
Well, we think we're going to see exactly what Mark talked about, which is, broadly speaking, the consumer continues to be very healthy. Advertisers continue to be very healthy. So for Uber tonight, we're expecting about 30% plus growth rate. For Peloton, where you're looking at about 65, 70% year-on-year growth. So really, really strong. But, again, there are some issues. Regulatory is an issue. This big macro potential slowdown is an issue for a number of investors. But I'd say, halfway into earnings, we're pretty happy where we are. In terms of valuation, you said earlier in your opening remarks that we're obviously trading at an all-time high. If you look at the Internet and Digital Media Group, we're not. We're trading probably somewhere in the 14, 15 times multiple of cash flow. It topped at 19. So we're substantially below. And in fact, year to date, we're dramatically underperforming the S&P 500. We're also underperforming it in the last 12 months. So we think valuations look really attractive here.
Youssef, John just touched on it, but it's been an absolute bloodbath for many of these small and mid-cap internet names. Do you see buying opportunities among the wreckage right now? And if so, what?
Yeah, so the ones that have, frankly, kind of blown up, we don't actively cover, like Pinterest and Wayfair. That said, there are a number of smaller cap names we really like. Now, they just happen to have not reported earnings yet, but Stitch Fix is one, Trade Desk is another, SurveyMonkey is another. So certainly among large caps, we think the usual suspects will continue to grow at a very healthy rate, and we continue to recommend them. But there is definitely a fair amount of value in some of the SMID, some of the smaller names that are not necessarily household names.
Mark, Facebook out with a little bit of news today on how it's going to brand its whole family of apps, WhatsApp, Instagram, et cetera. I had the sense up to this point that Facebook got some benefit from people not really realizing that WhatsApp and Instagram and other things were part of the Facebook family. Now they seem to want to make that especially clear. What's driving that? Anything for investors to take away?
I'm actually unclear about what the rationale is. I kind of agree with your bias on that, John, which is the brands were known independently. They probably are better known independently going forwards. Is there a win here long-term for Facebook and investors if they can get people kind of cross-pollinate them? It certainly is a win from advertisers if you can use all that information you get out of Facebook campaigns and find those people on WhatsApp and target them that way. But I think that's years away. So I don't think there's a big natural win out of this move by Facebook.
Youssef, you think this is a data-based defense, perhaps, that maybe people can't argue, oh, well, you're mingling the data from all of these different applications, but you're not telling us that you're doing it. Facebook now saying, hey, we're putting our name on everything. So it should be clear to everybody that all of this stuff is engineered together?
I think that's absolutely the right way to think about it. The other thing is, from a regulatory standpoint, to the extent that Mark Zuckerberg, that is, makes it really hard to kind of segment or kind of divvy up these assets, particularly Instagram with Facebook and ultimately Messenger and WhatsApp, et cetera, it becomes harder for regulators to see them as separate units and instead really seeing them as a whole and seeing the umbrella ecosystem as really what's driving this business, which is ultimately, what every successful company tries to do, from Google to Microsoft to Amazon.
Can I ask you about Airbnb? We were touching on this earlier with Kara, but you have this issue with some of the renters. You've got some issues identity and verification-wise with the landlords. I had thought that this was a company that was largely out of its troubled waters period, but these thematically, these issues are similar to what we've seen with Facebook, it seems to me. How does that look to you heading into potential IPO next year?
I was going to spin it a different way, which is it's kind of similar to kind of the gig economy issues. So you are, you're putting, as a marketplace where you're putting together a lot of humans, you're going to have privacy issues, you're going to have I don't know, personality issues isn't the right word, but the way people interact with each other. So you're bringing them into people's cars, you're bringing them into their homes. There's a lot of need for screening from both the hosts, the drivers, the riders, the renter side. And I think some of these moves are probably necessary. So I guess I can't rent out my house for parties in the future. I probably am losing some income, but I'm probably going to sleep safer at night. Airbnb, by the way, there's one thing that we're not talking about. Uber, there's a big issue on Uber, and it was with Lyft. Just the magnitude of the losses. We'd never seen losses that big before. That's why those are sui generis, or those are IPOs on their own. Airbnb, without a prediction on what's going to happen to it, is clearly coming to market without anywhere near those kind of losses. In fact, it looks like they're roughly break even. That'll make it at least less, it'll make it more palatable than those prior two offerings.